Hi everyone, this is Peter Offen from the UK, and with here with Tom Williams and Rita Offen, and we're doing our weekly stock pick. So we've got the index to look at, and we've got one, two, three, five stocks we're going to touch on. And just to say, these are stocks that are acting as strong as or stronger than the index. That's the principle behind picking stocks, or one of the principles. And with that, I'll hand you over to Tom, and he'll talk about the index first of all.
Well, thank you, Peter. Thank you, Rita. Whatever we do, we must trade in harmony with the index. And you can see the chart here. We've got the Dow Jones Industrial 30 here. Sorry, the S&P, sorry. And we can see, first of all, it is crawling upwards, be it crawling up on really no demand. But being Christmas, they seem to be convinced they want to have new highs for Christmas and the New Year. By the look of it, it's overbought, so it's very vulnerable. But hopefully, when a top is eventually reached, we will spot it and notify you. Normally, markets like this, that if you look at the weekly chart, it's been running for many, many weeks, a bull market. It's been running upwards on occasional shakeouts here and there. And normally what happens is that eventually some terrific good news comes out and is marked up. And a lot of traders think, I'm fed up of waiting here, I'm going into here long. And they go long. That accounts for very high volume because professional money will start selling their holdings into this markup. And that's usually what we call the buying climax. And if it's a true buying climax, it'll mark the top of the market. But we'll watch out for that and make sure, or hopefully we'll try not to miss that in any way. We've got a few stocks selected. They are stocks actually stronger than the index. In other words, there's no weakness in the background. That's the main thing you've got to watch for when you're trading stocks, is to make sure that you don't have don't like high volume and up bars. A little bit no demand, perhaps occasionally, but they certainly don't like high volume and up bars. And we don't. If we see that in the stock, then we turn the page, because you're then vulnerable, very, very vulnerable for it to start coming off. Right, what's the first stock, Peter?
Okay, so this is AIZ.
AIZ. That's right. Now, if you notice with this stock, look, it's acting as strong as the index. Okay. We've got a nice shakeout in the background, look. We've got another shakeout here. We've got a test, a red down bar, pushing up through supply, a little surge in volume there, look. And it's gone up, rounding over slightly, but it's acting stronger or as strong as the index. And there's no really high volume up here to say that I'm not going higher. Next one, Pete. AXLN.
So that's ALXN.
ALXN. Right, this is a very similar thing, look. It's had a shakeout down here. Right, pushing up through supply to the left, look, a test. It's gone up, look. I can't see any high volume to say there's supply in this. There's a red down bar, look. and there's not a lot of selling pressure in that, and it's responding every time the index goes up. This stock is responding. Next one, Pete.
So this is
AMP, this one. Right, there's another one that's acting as strong, if not stronger than the index. Now what's interesting here is the principle that we've mentioned many, many times. Whenever you see a red arrow, right, no demand that is, with strength in the background, is immediately followed by a test, that means you're going to get higher prices. Now we've seen this many, many times. And there's a test, look. That's definitely a test. And that's why prices have gone up. So remember that whenever you see a red arrow and the next bar is tested, that's going up. Professional money have seen the weakness that produced, so they had a test of the market just to make sure. The test was successful, so up it goes. That's you see that often in these bull runs. Next one, Pete.
This is BAX.
BAX. Now this is acting as strong as the index, look. There's no high volume ending up bars here. Can't see any high volume. There's a little bit here, but that's absorption from the supply to the old top, look. And that actually, blue bar, looks like a test. They tested that sometime during the day, look. They've marked it down, the volume's low, and that's why it wants to go up. Okay, that's it, is it, Peter?
One more.
One more.
BBY.
No, BBBY.
What is it?
BBBY,
Oh, yeah.
2 up.
That's right. So it's BBBY.
BBY. BBY.
Bed, Bath and Beyond.
BBBY.
Bit of a tongue twister. What is it? BBY.
No.
No, it's BBBY.
Oh, BBBY. Sorry, folks. Okay, good. Well, now, funny enough, here's our pal, the red arrow, look. And there's a test next to it, look. The professionals would see the weakness that produced that red arrow, look. They've seen that in the market, so they just test it. Now, wherever we see that, we know we're going to get higher prices. And I can't see any high volume to say, no, there's too much supply here for me to go up. This looks as if it wants to go up in harmony with the index.
Okay, thanks Tom, thanks Rita. Yeah, so as always, we're not saying that you should buy any of these stocks, it's merely we're saying what we see. And it's of course everyone's own responsibility how they trade. So don't forget the key principles are that the stock has to be really acting as strong as or stronger than the index. They're the ones to look out for. I do see from time to time emails coming through saying that you should look at all the stocks that are sort of dragging along the bottom of the chart because they're obviously going to be a very good buy. That's one opinion, but if you follow what we say or what Tom says, you'll say that those stocks that are dragging along the bottom of the chart are dragging along for a very good reason usually. In other words, avoid them. So as Tom said many times, there's no bargains in the stock market. So you'll be looking at buoyant stocks that are acting as strong as or stronger than the parent index. So with that, I'll thank you very much and we'll see you next time.